is on something interesting, something completely different from the ones we've been having before now. So it's public sector financial statements, right? And interestingly, it's something not so many people are aware of. For me, I became aware of this year more like, so, I'm hoping that many people will find whatever I'm sharing today completely new and interesting. So public sector financial statements, many times when we talk about financial modeling, we don't think about public sector. We don't think of government, of maybe state government, local government, ministry, federal government. We usually don't think of them. We just think of, the typical company selling something, maybe a service, maybe manufacturing a product. So what is different about the public sector financial model? It should be small letter P. So for a public sector financial statement, so financial statement, that's what I want to talk about more. There is a standard, the same way for the private sector, we all know of the IFRS, right? So for the public sector, theirs is called International Public Sector Accounting Standards. So this is like the IFRS for public sector. So it comprises, so for us in the private sector, if you download any, the most, like a company that has operations in maybe all the countries in the world, maybe they are so big and all, their statement is usually just statement of profit or loss, statement of financial position, cash flow statement, statement of changes in equity, right? 4, then notes, notes. But then for a public sector, typically it's 5, then notes. So statement of financial performance, which is like for profit companies and profit or loss statement, statement of financial position, statement of changes in net assets / equity, cash flow statement, and this is the one we don't care about in the private sector, which is the statement of comparison of budget and actual amount. Then the notes, okay? So let me just show us some of the documentation and see if I can share links for you to go grab some of them. Let's see, I hope I have not closed. Good, so I'm going to share on this one. But I have it. Let's exit this. Yeah. So this one. So this embodies the IPSAS financial statement documentation. So I'm going to grab this and dump it in the chat box so you can also use it while, and specifically too, I want to bring it home to us, to Nigeria. I see there's someone amongst us who is probably not a Nigerian, but the name sounds African, so I hope you relate with it too. But what I have prepared is to show us Lagos State financial statement. So I'm going to share with you the link of how, so the 2020 is out. That's interesting. And also the 2019. The last time I was working on this, they were not out. Okay, so that's great. Maybe I should use the opportunity to download the 2020. So instead of using the 2018, I was planning to use. So let's 2020 financial statement. So Lagos financial statements. You get it from here. Okay, and right, so let's go straight to it. I don't think it would be nice because we have just 1 hour. Instead of me walking you through the standards, the documentation itself, it would be better I walk you through a live. Let's do the Lagos one, right? So that is going to be, we are using Lagos State 2020 live financial statement. So I'm going to just open it on my. Okay. So, like I told us, there's a statement of financial position, financial performance, statement of financial position, statement of changes in net assets, statement of cash flow, statement of statement of comparison of budget and actual, accounting policies, and notes. Well, notes generally. Okay, so I had prepared ahead 2018, but I can see that there is the 2020 out. So let me just use the 2020 straight away. Let's use that one. So number one is out of the way. Those who just joined, you might have to watch the recording to get what I've said, but there are 5 critical areas in the statement of, in the financial statements for a public sector entity, okay? And the statement of financial performance. Anyway, let me start repeating myself. So let's go straight to Lagos State's financial. Lagos State is trying. You know, some companies don't even have their 2020 financial statement out. As in companies who are trading on the stock exchange, even though there is fine and tariffs and all. But Lagos State is really doing good. Okay, so all right, so we start from here. I hope you see my screen. So the first aspect of the financial statement is usually the financial performance. So the statement of financial performance is the equivalent of our own profit and loss. When I say our own, I'm talking about the or profit companies. Okay, so there's the revenue from non-exchange transactions. So let's talk about the revenue side. Revenue side is always split into 2. So revenue side is always split into 2. There's the revenue from non-exchange transactions and there's the revenue from exchange transactions. Anybody wants to give it a try? What do you think is the difference between non-exchange transaction and exchange transactions? Anyone? Anyone? You can, if you look at the breakdown, yeah, you will get some tips, you will get some ideas. Anybody wants to give it a try? You can type, you can unmute yourself and say something.
Yes, hello?
Yes,
yeah,
yes.
Good afternoon.
Good afternoon, sir.
I think revenue from non-exchange transactions are revenue that they did not work for it, that's what I say. While revenue for exchange transactions are like selling of goods and services to third parties. I think if I'm right.
I don't want to
So that's my opinion.
Yes, thanks for sharing. Someone else who wants to say something, then I will now comment. But thank you very much, Mr. Akim. Mr. Sulaiman, I saw you on mute. Yes, good afternoon.
Yes, okay. For me, non-exchange transaction has to do with the fees, and when you talk about revenue, that the state got from fees and levies on maybe fees, for instance, as it is stated, the levies, fines for people that erred against government and all of that. These are the funds that the government gets from all of that, grants as well. Then when we talk about the exchange transaction, which has to do with maybe investment that the state government did and their return on investment. That's my idea of both of them. Thank you.
Okay, thank you. Thank you. William, I see you also want to say something. Yes.
Yeah, so I'm from Ghana, so please, my accent might not be the same as yours, but my little understanding is basically revenue from
non. It's not the same. Every other thing is the same.
So from non-exchange, largely is from statutory deductions or statutory levies which have been imposed by the government, whilst the revenue from exchange transaction it's from other investment activities that they generate income from. So one is basically statutory, and there are fines that has been set up by the government to raise income, while the others are not.
Okay, thank you too. Any person who wants to chip in, want to add a different dimension or emphasize anything anyone has said? Okay, so I think Mr. Kim mentioned the closest words to the textbook definition, but everybody is correct. So thank you very much for sharing. Let me show you some of by the textbook definition. But we are all correct. You are all completely correct. Will this be better? I think there's another one I have that I think is a lot more elaborate. Okay, so let me use this one. So you even see they quoted the standard number. So JSB 33, exchange or non-exchange transaction. So let's read it together. So an exchange or exchange-like transaction is one in which each party receives and sacrifices something of approximate value. So that's why I said I think the word Mr. Hakim used, kind of, he said we worked for it, like. So I really like that choice of word. So let's continue. So it's where each party receives or sacrifices something of approximate value. A non-exchange transaction is one in which one party receives something of value without directly giving value in exchange. So it could be grants, or well, before we go to what it could be, I think this one makes it a lot easier for us to see. So for a government, for a non-government, non-profit organization, they might not have this statutory allocation. They might not even have fees and levies. They might just have grants and things that, okay, maybe by definition of grant, they are close to grant, but they are not exactly grant. But we get the whole idea. The fact that you are paying that money, you are giving that store of value. I like one other place called it store of value. Let's check. Let's go here. I think this one also had a very nice way of explaining it. Yeah, so non-profit organizations may receive contributions or other revenues from a variety of sources. However, there are two main classifications of revenue transactions that non-profit organizations, accountants, and managers should keep in mind when recording them in books and thinking about where they receive their funding. One is exchange transactions, and the other is non-exchange transaction. Now, the primary difference in determining between these revenue types is whether the organization provides substantial value in exchange for the goods or cash received. So when government provided you substantial value in exchange, when it's as if you are purchasing the service from government, I send my child to a government school that you pay school fees, maybe it's subsidized. Like those of us that went to federal universities or even state universities, that income, right? That school fees we paid, there is an exchange of value, okay? So that's when we come under exchange transaction. But, my employer deducted from my salary and paid it to the government. At that point, there is nothing I received back for it, right? So that is going to be like a non-exchange transaction. So in all, we are all correct. I just wanted to show us also to what's like it by the textbook definition is, so that nobody is having any gray area. So we can see how for a government that collects tax, taxation income is under the non-exchange transaction. So for Lagos State, it's a lot. you know, that's where the bulk of their money comes from. You see that it's larger than any other category of their income, right? And then there's fines, there's levies, fees, and fines, followed by statutory allocation. You might ask, so what are the things under the statutory allocation? We in Nigeria know that there's a money they always share at the end, and every year that is, so let me just quickly take us to where it is here. So you see a breakdown of that statutory allocation. So you see the notes. So allocation from federal government, the sharing of the value added tax. So those ones are the major ones. Then there are some other small ones, you know, that do not, some don't even come, like, see, for example, in 2018, they didn't get stabilization fund, they didn't get petroleum profit tax. So you could say for Lagos State government, the majority of their statutory allocation comes from value-added tax and federal government, you know. So refund, I was surprised when I saw this. So the money of Paris Club is still coming in, man. Sometimes you wish you are like a government, so you just keep collecting money, you know, non-stop. Like, so is it not more than 10 years now? Okay, so then grants, obviously grants. You know, even by the definition, some non-government, non-profit organization, that's going to be the bulk of their own non-exchange transactions. Then we go to the exchange transactions. So for exchange transactions, yeah, those revenue where there's an exchange of value, so income from services, capital receipts, investment income, interest income. Again, you might want to check, okay, can we look at some breakdowns of this? Let's go check it out. So if we go to the exchange transaction, so if you look at it, income from hospital, land transactions, rental income, Lekki toll gates, which let's read it because there's the agreement between LASG and the Lekki tolling company to manage Lekki toll gate was terminated on May 31st, 2016. So as from June 2016, Lekki, okay. They were explaining why they were no longer making the money off from that one. So that is understandable because I was surprised when I saw it. I knew it was already moved to LCC. So that makes sense. Then when you go to the capital receipts, survey fees, sales of ferry, but you see why we say this is something that there's an exchange of value. You know, you are getting value out of it, even though you are paying to the government for it. It's something that there's a value you are getting out of it. Similar to for investment income, and so that is clear. We move on. So then we have the expenses. The expenses looks, well, very much like, compared to the revenue, the expenses looks very much like a for-profit expense too, in terms of you have wages, salaries, and employee benefits. The part that are different is just the fact that there is subvention to parastatals. Okay, you could have called this grant and other transfers, other income for a for-profit company, but essentially for government, for a public sector, you have total operating revenue. So that's one terminology you also have to get used to. So total operating revenue, total operating expenses. And then for a government that does not pay tax, you know, so you are not going to start having, oh, what is the tax, you know, that they are going to pay and all. No. So for them, immediately you deduct the total operating expenses from total operating revenue, you get their own kind of profits. So it's called surplus. You know, so you get their own type of profit, which is the surplus. It can be a deficit or a surplus. So it's not always, see, so it might not always be a surplus. So they don't call it profit because they are not supposed to be profit oriented. So the terminology is different. We are talking about, is there a surplus for the period? And as you can see, Lagos State is swimming in surplus of money, right? So they have a huge surplus, and that's just if Lagos is a cash cow. Then something very, very unique. Can you see capital expenditure right in a statement of financial performance? What I say is like the equivalent of our own profit or loss. So what you will not put in a private company statement, the capital expenditure, they reflect it. So what's the total capital expenditure? Then what's the, more like this is the interest expense. This public debt charges is what we would have called interest expense. Again, let me prove that to you. Let's go to the notes. Notes. Capital expenditure. Okay, great. See? So the capital expenditure, well, you all know that, but this is the one I wanted to show you. Can you see that this is why I said this is the interest expense? What for a for-profit company you call the interest expense, they have termed public debt charges. So it's as if you are saying, oh, what is our interest expense? But the only thing is, in a for-profit company, we are not going to put our capital expenditure. Rather, we'll capture just depreciation, you know, but they capture both depreciation and the capital expenditure. Okay, so then you have also the net gain or loss on foreign exchange transactions. Then provisions, you know, in this case, damaged assets. So whatever you have to make provision for as regards the, you can call this revaluation of asset anyway. So this is now the realized one anyway. Okay, so, and this is what is really, really unique about a public sector financial statement. The fact that you don't have the typical profit or loss statement, you use some different terminologies, and the arrangement is also unique. Okay, so with this, you now have the surplus or deficit for the period, but this does not have any equivalent in the for-profit company, because you will see that this is capturing capital expenditure in addition. Okay, so for me, I suspect it's because they don't want to show that the public sector is making a lot of money. You know, they don't want to create this impression of we are making profits. So they want something that will tone down that profit orientation, because by the time you take out capital expenditure, you know, you shouldn't be having any profit, you shouldn't be having a surplus from, or having any significant surplus. Thinking of, you know, comparing this with this, you will see that you know, this completely changes the perspective. You are no longer seeing it as, oh, we made a profit of 348 billion. You are looking at, oh, there's a deficit of 152 billion. But in reality, the state was raking in a lot of money. You know, capital expenditure, you added it as something you deduct, and you still went ahead and deduct depreciation. Very rarely will you have a surplus when you do all those big ticket deductions. So I'm going to move on to the financial position. So the financial position is completely alike with what we have for a for-profit company. By the way, any question on any comment or question on this part? Has anybody worked on both sides, or does anybody work with a public sector entity currently? Is there any comment you want to add to this? So if no comments, I move on. So if we go to the statement of financial position.
Sorry, before you move on.
All right.
Yeah, I can see the total revenue is about 650 something. And
Yeah.
when you add the total expense and the total capital expenditure, it's not up to 658. And we are now having deficit of 152. Where is it coming from?
Great, great.
Because
See, so if you look at my screen clearly, you will see that this is actually the deficit or surplus, which is a surplus, which is equal to this one minus this one. Okay, or let me repeat that, which is this one. If you call this 1 and you call this 2, then this is like 1 minus 2 equals this. All right. Then this is what you are looking at. What they've done here is now they've added up all of this, which you see equals this. So if you call this 3, if we call this one 3, then this becomes, and you call this one 4, then this becomes 3 minus 4. So it's very funny because why will you be deducting capital expenditure?
Abi,
And at
you
the
should
same
have
time deducting depreciation.
you should have go to our financial position. Well, it's public sector.
Exactly. So their own statement is done in such a way to bring down the focus on profit, to take away the mentality of profit. Because it's very rare that for any organization, any entity, public or private, if you deduct this from revenue, capital expenditure and depreciation again from revenue,
Again, that's double counting now.
it will most likely come up now. So
Yes.
Exactly. So what you said is something that is.
I'm not sure. I'm not sure this account doesn't even represent the IPSAS at all, because if you are minusing the capital expense from the revenue and you are still charging the depreciation, it's like you are already double count the stuff already.
I get you. So let's go check the IPSAS templates. Though Lagos State tried to follow it to the letter, but I've not really compared that thing you said. So let's look at it together.
Or what you can do, check the notes to the account to see the explanation.
That one will really break down what the capital expenditure is and what they did for the depreciation. But his main point is that is double deduction. You're deducting the capital expenditure and you are deducting, am I in the right document like this? Actually, I've gotten there by now. And you are also deducting
the depreciation. Because the essence of depreciation really is just to allocate a cost that shouldn't come to our income statement already. So if you already deduct the whole figure, why is it not deducting depreciation again? Like it does not align at all.
Okay, great. Okay, so we are checking.
Okay.
Okay.
I think you've gone past the.
Yeah.
It should be around this place.
You're right too. They have deviated from it.
Yes, of course. Now they deviated now.
They have deviated from it.
So maybe we should pass the adjustment for them. Let's move the capital expenditure to the balance sheet and keep the depreciation and amortization.
Yeah, that's how it should be. Really, honestly, that account is Ururu account. It's not.
Yeah.
So
It's just
they were
Ururu.
the you know, in for profit, you will do your normal net income attributable to equity owner. Then you now go and do the other comprehensive income, and then you do, you know, the almost like what is here, right?
Yes.
Control 4. This part. So for them, they have decided to tweak it a bit. And it doesn't make sense now that you mention it.
Honestly, it doesn't make sense really, because how would you have deducted capital expenditure for your revenue? You are still charging depreciation. As in, at the end of the day, you go and represent this capital expenditure in your financial position, and it doesn't even align at all. That this account is just, and they audit it too.
Yeah. That's
just check note 22. Let's see the explanation of what they did there.
okay. So let's go pick the note 22, and that will be note 22 and note 31.
Yes.
22.
No, depreciation is okay, but that capital expenditure is where the problem is.
So this is the capital expenditure. This is the nominal expenditure actually. If you check, because I worked on this actually. I worked on this for a training this month, so I'm a bit familiar with you. That was why I picked it. If you go to the cash flow, if we look for the purchase and construction, right, you will see that it's a bit similar. If you see the figure here, 300 and
no, you know, for cash flow is okay for it to be there as capital expenditure, but in your income statement, you cannot just hit that capital expenditure on your income statement.
I'm even saying that the value is the nominal value, it's not a differential of maybe say that's a very funny one. It's a very funny, because if you look here, it is the actual, it's a nominal expense value. See, these values they're not small. They don't look like, oh, this is with the depreciation we took for this period. Rather, this is the actual value spent. Okay. So thanks for flagging that. Who knows who we can draw the attention of?
But first of all, check
let me tell you.
Check who the auditor is. Let's check who the
they know what they are doing. They know what they are doing. You don't need to check with anybody. Are you saying they got say is they know what they are doing? I want to believe they know what they are doing. That's government Jimmy.
It's not one of these big four that does the auditing. Let me.
They won't call the big four. That's it. Because when you charge the capital expenditure on an account, you are still charging the depreciation. So on what basis now? And that's how they be doing it every year. Just like you are double counting.
Yeah, it's double counting for something. Let me use this one. They didn't write the auditor in that 20. This one has the auditor. Check this. It's like there's no auditor. I thought I saw auditor in one of them. Let me check 20. I have a couple of them. I saw auditor. I could swear that I saw auditor in one of them. Lagos State. Let me just download it again. There is one I saw auditor there. I even think I remember the name of the auditor. Maybe it's this one. It's not, I know it was not one of the big four. Wow. There's no external auditor then. I thought I really saw an external auditor. There is no external auditor.
Michael, please, can I make a suggestion?
Yeah.
I think we've all identified that there is an error in the statement that was prepared. But for the purpose of our training, well, maybe we can just ignore that, and maybe we can proceed with our training and get the idea of the main objective of our training. That's my little suggestion.
I agree. Do you want me to keep using this one, or I use another one? I have the one for Abu Dhabi.
We can still go on.
We should use it, right?
Yeah, we all know that there is an error.
Yeah, now I'm being careful also too that what if the error does not end there? So, you know, it's not good to use a faulted, like something that is not certain to use to explain a concept for the first time. It's better we explain with something that is perfect. Then we can now be looking at.
And don't worry, anything Nigeria can never be perfect. So let's just...
Okay, let me just pick out the Abu Dhabi one. I have one that was for Abu Dhabi that I was using in one of.
So use Nigeria because we are more familiar with Nigerian.
Let's see Abu Dhabi. Let's see Abu Dhabi. Let's see it anyway.
Okay, let me just open it. Let me look for where I downloaded this stuff. I have it in PDF. PDF. This month is, so that should be around beginning of this month. Beginning of this month. That means it's not here. Right. Yes. If I don't see it in the stuff, I'll just download it again. It was a beginning of this month I got it, so it's also not here. Not a problem. So I'll just download it again. To IPSAS financial statements. I think it's done. Okay, I think this is it. It's already showing that I've gone there before. So I think I'll feel more confident. I will feel more comfortable using this then. You know, if you didn't draw my attention to it, I actually believe that they had a justification for it, even though it looked funny to me too. That why do those do both the capital expenditure and the depreciation in there? So while this one is downloading, I can at least do some continuation of where we were. So for the statement of financial position, even when I looked at the IPSAS standard, it's very much the same as the normal IFRS. So you have the current assets, you have the non-current assets, you have the current liabilities, the non-current liability. So what's just a bit different is that for the current assets, for the non-exchange transaction, so it's usually called recoverables, which makes sense because you it's not like you give the person value and kind of, it's more like you're trying to recover like a levy, recover like tax. So I completely understand the change in terminology for the non-exchange transaction. Okay. Then the other thing that was different is their own inventory. So let me ask you, what do you think makes up the inventory? Again, based on what I've seen there too, I might, I'm okay with if somebody says something different about this. We go verify if what they have done is not completely as it should be, but it is very, very slightly different kind of to what we in the for-profit, in the IFRS, we pick as inventory. Anybody wants to guess what this inventory is? For a state government, what do you think?
I think that inventory should be, they said they are selling both all those things. I think that should form part of their inventory.
Okay, anybody has a different opinion? Okay, Mr. Akim, I like what you said. That was my first explanation. Actually, I had a training for public sector people, and we decided we had to be dissecting this thing. So this is one of the places too that we had a conversation around. So I want to know what other people think. What they said is completely different from what you said. What you said is what I said at the beginning. Anybody think? What do you think about this inventory? Anybody want to say something before we go and check the notes? Let me check if this one is done. Okay, great. This one is done. So let me also open this. And this thing actually says that I have it, and I was looking for it, I didn't see it. Anyway, I'll open it again. Yes. All right, so let me show you what is there. Let's go look at the inventory. Inventory. It should be around here. Okay, great. Can you see
Hello? Hello?
Okay, can you see my screen? All right, so what do you think? Consumable stores, medical supplies, spare parts, goods held for resale, uniform, sport kits. So if you want to compare this to what a company has, consumable store, just think of your office supplies. Medical supplies, okay, the government has hospitals, so yeah, it makes sense, the medical supplies and spare parts. So think of your spare printer parts, your spare generator parts, your spare, spare parts, right? Goods held for resale, uniform. So imagine some of your staff needs to have an official kit. So maybe you run a private security entity, and then your private security people that you are loaning, maybe you are alloging securities, right? Are you going to put the uniform of your staff under inventories? So what do you think? What do you think about this? So if you are going to be forecasting this, are you going to be able to use the logic of days inventory outstanding? Oh, in our warehouse, we hold our inventory 4 days before we sell, or 20 days before we're able to completely sell it out. What do you think? What do you think about this breakdown you're looking at?
I think they are correct because those inventories are for consumption. So it's when they consume it, they now expenses. So they are very correct.
Okay. Before I bring in one other angle that came about, Anybody has also another opinion about this? Okay. All right. So the other part that came into it is, so when these inventories are consumed, which other account do you post this against? Take for instance, let me not try to go through granular. Which other account do you post this against? Do you post this against your general and admin expense? Do you post it against Mr. Akim? What do you think?
Yes, this one should go to general admin expense, but they are generally for admin. Spare part, it's only spare part that could say it not go to general admin. But medical supply, consumable, goods head for sale, okay. Some of them should go to admin generally, general admin.
So great. Let me check with the one I downloaded. And but you can see the things you mentioned, they are not here. The houses the government has that they have, they want to sell, is not here.
So where do they put all those ones?
You are the one that said you are right. So now you're asking me.
No, what I'm saying is, what I'm saying is, maybe I'm not saying certain. They may not have all those ones in stock. They may not have it in stock, but maybe these are what they have in stock. That's why they call it inventory. But what I want us to check, in their income statement, they said they have deficit of 152. Let's see how they finance that 152. Is it part of the new borrowing for 2020? Maybe we should go and check the breakdown of their borrowing for 2020. If it is part of it, because they have to finance that 152 by way of borrowing.
Also, we have cash and cash equivalent. So they have like accumulated cash already that will fund that part.
Okay.
So let me quickly just bring up that one, this one here.
Okay.
So let's do a bit of comparison. Okay, great. Let's start from the financial performance. They removed the value, but no problem. We'll go look at the notes anyway. So contribution to government, yeah. So the same pattern. The depreciation and amortization actually came under the total operating expenses,
which is correct.
With the way IFRS also is being done, so it makes sense. Then the public charges, this look very, very similar to how we do our typical one. Then the net surplus and deficit, there is no capex knocked out of that. Makes sense. Okay. Let's go to the so let me go check the notes for inventories. So the breakdown aligns completely. This is exactly the same breakdown here on the Lagos State one. So exactly same breakdown. Let me go check the notes for note 10. 10. Because they didn't do actual value in here, makes it tricky. There's another one I have for a UN organization. UN financial model, financial statements. I forgot that these Abu Dhabi did not put their own values inside. Okay, great. So, really interested in the values too, not just the breakdown. The Lagos one will have been really nice. That was what I planned to do actually, because it's everybody relates, will understand the values as the still loading. So if this one loads, I'll check what they put in the inventories. Yeah, what I was expecting was expecting more than that. That was my main concern actually. I was expecting some other things beyond just those line items that were there. I didn't see anything that translates to what will have fed into the exchange transactions. So the other things available for sale, investment, other financial assets, plant property, completely the same as we have it for a for-profit company. Then the payables and other liabilities. So public fund, what do you think is public fund? So I'm just wanting to highlight the things that are different instead of just trying to do everything once again. What do you think is there for public funds? Anybody wants to share? What do you think is in public fund? Remember, it's under current liabilities. So when you see this, what comes to your own mind? What will government classify as public fund and put it in current liabilities?
I think it should maybe for benefit to staff, like pension, something like that. That ought to have been paid to staff.
That one you said is here.
Okay.
Okay. So I will show us what it is, but it's something unique to I think even a government. So that's why I specifically didn't want to call this non-profit organization, but rather public sector, because this is purely just to a public sector that we have this public funds. So let's go to the note 34. Let me show you what's in there. So you're going to see if I don't know if any one of us in university collected bursary. Yeah, so let me not break the surprise. So it's not 34, it should be no public funds. Public funds. Okay, this is it. Okay. Are we seeing it? So scholarship, bursary fund, joint crown fund, government staffing housing, staff equity for republishment, blah, blah. But as you can see, these are things that are really specific to a government kind of entity. So these are like special purpose funds that I think for government housing now, probably it's already been taken out of employee benefits kind of stuff, or how will I classify things. I'm even looking for Lagos State, that one they used to advertise on TV, the foundation fund. Let me check here if I'm going to find out. When did they start that Lagos State Foundation? Maybe it's not in the 2019 one. Let's check here. But at least you've seen the kind of things that are in the public fund. So these are like special purpose funds that are supposed to benefit the citizens, or that's why it's under liabilities anyway. It's exactly the same thing as we have here. So I move on and we go to the movement changes in net asset and equity. So we have seen what's under current liability, non-current liability, completely the same as for a for-profit company. What you would have called equity is preferably termed the net assets here, and what we would have called retained earning is accumulated surplus here. Then, as usual, you can have other reserves that you take against your equity base. So this, if you ask me, I would say this is very much like also for a for-profit company. The only difference is instead of accumulated surplus, we would have called it retained earnings. Okay. And so that's done. We've captured all what is in that one. So the statement of changes in net assets. Okay. So statement of changes in net asset, the movement on the asset side, actuarial gains or loss. Really, for me, I'm not even when I am working with for-profit companies, I don't even bother looking at the statement of changes in equity, because for me, they are more like for transparency stuff. Whenever we are doing financial model, most times we don't even include them. So I never really pay too much attention to them. So I don't have much to say even on for this, because even for profits, I usually just keep it. Okay. And so I think these are for 2 different years, 2021, then 2019 one. So we move to another key item there. So I want to ask us, what method do you think they have used for this cash flow? The direct method or the indirect method? Anybody? Is this the direct method or the indirect method?
It's direct.
So in the training I had, we wanted to build the next 1, 2, 3, 4, next 4 years projection. 2019, 2020, 2020. Yeah, next 4 years projection for Lagos State. I had to adjust this cash flow to the indirect method to create the projection. So when it comes to forecasting, it's very, very difficult to use a direct method base for forecasting, because this is like you're just looking at the bank statement and looking at the different payments to different account types and classifying them separately. So this, you see, follows the very pattern of the revenue, so how much of the revenue actually hits the account, so that's the cash receipt side. The cash receipt on all of these items, similarly to for the exchange transaction one, you also have the cash receipts. And for the payments to the actual cash payment outflow, so by the time you take out the total payments from the total receipts, you're going to have the net cash flow from operating activities. Then investing activities, as you'll see, is all the things that relates to CAPEX, and in their own case, they have a bond sinking fund. So by the way, that was another thing we deliberated on during the training. What's inside this bond sinking fund? Okay, so what do you think is this bond sinking fund is around? Well, let me go to the notes, but anybody wants to say anything? What do you think? What comes to your mind if you see that bond sinking fund? Bond sinking fund.
Sinking fund is just like amortization that you just be paying a certain amount to a specified account.
Awesome. I like the way you explain it. It has even reminded me some of the things we discussed about it. So, the state government is always issuing bonds, right? And most of the way bonds are issued, you get the face value back at the end of the bond. So you are getting your coupon payments periodically. Then upon maturity, you get your lump sum money back. So is it that very year when the bond mature that the government is now going to start looking for the money to pay? So there's a sinking fund that has been set aside to cater to start preparing ahead for the bonds that will soon mature. Okay, so those are some of the conversations we had. But let me just go look for the notes again, and let's look at what is inside exactly as it is in the notes. Don't know why it's taking too much time to come out for me. Let me come here again and pull out one sinking note. Okay, there's no note in this one for it. Every time I scroll this one, it's always difficult to scroll it back. Page 15. Let me memorize the page. So 30, go to note 30. Well, Lagos State is actually trying. There's one other state that I don't want to mention the state that I had so I don't want to say too much, but they are even still trying to migrate to IFSAS. So Lagos State has migrated to IFSAS since 2016. Before then, 2015, they were using almost like what is the equivalent of GAP for profits. So it's called, there's a name for it. Let me just go to this place and check it. SAG. That was what they were using before then. Note 30, right? Sinking fund. They didn't break it down here, actually. They didn't break it down, but that was it, Sha. So when in the training, that was what because the people that were in the training are actually Lagos State people, so they know the inside of the terms more than me. So that was the actual explanation.
No, that's the anything sinking fund. You are just like keeping money for something to finance something in the future.
In the future.
Yes, it's correct.
And that's pretty much everything. The financing is the standard financing. Money you borrowed, money you paid. Then that's public fund that we talked about here, bursary and all. So movement in it. So it's also captured here, but they don't do dividend. So unlike for profits where you're going to talk about dividend payment, there's no dividend payment. So there's just one more report that they do that we don't do, which is the comparison of budget and actual. There's nothing special about it beyond the fact that for government, it's a very big deal to work according to budgets. So what was budgeted versus what was eventually spent. And if you look at it, the budget is on both receipts, money that comes in. So the money that has come in, what was the target, and then did they achieve the target? So there's always a final, there was initial, there's final. I don't know too much about the dynamics of the separation between the two, but I note that for 2018 and some of the years we evaluated in the session I had, they were the same. So I can see that for 2020 is different, and I understand that maybe the COVID had to make them revise the targets, right? So that's why it makes sense that the final is considerably lower than the initial, okay? But as for the processes that leads up to revising it, no idea. No visibility into that one. I don't know what it is. But the difference is always on the final versus the final budget versus the actual that came in. So the differential is always analyzed on the final budget versus the actual that came in. So this was even a good one. It looks like the differences was not so much. The one we did in class, the 2018 one, they were below their target by a really large number. So look at this one. They budgeted or they targeted they will get 350 billion naira from taxes. They got more, which is a good thing, right? And like that. If I show you the one for 2018, it's kind of like the reverse. It's kind of, see, they were not meeting their targets, and this is what I was saying. You notice that the final and the original were not different. So maybe there was no revision. So, but still, they always indicate the original and the final, even though there was no revision. And the comparison is always between the final and the actual. So our final minus actual, if you want to go with the formula. And you see they underperformed. They really were below what they expected compared to even the year that we had COVID. They still managed to, they underperformed, but not so much. The underperformance came largely from capital receipts. So this one, the only thing in the work when we were doing it in Excel was the fact that put conditional formatting, calculate percentage variance. But when you are doing the report itself, they stop at just showing the differences. So maybe internal reports, you now go ahead and do percentage variance. And this is the end actually. So these are the 5 things minus note anyway. Note is standard in every financial report. But these are the key 5 things that you have in the government a public sector financial statements. These are the 5: financial performance, financial position, changes in net assets / equity, the cash flow statement, then these budget versus actual. So I've come to the end though. We've even gone past the 3 o'clock. And thanks for the insightful comments. I never even saw that part of comparing. I just blindly believed that there was a provision under the IPSAS that allowed them to put CAPEX too in their financial performance. Even though I knew that if you do that in a for-profit, you're in trouble. Nobody is going to take that from you. So any other questions, any comments, any feedback? Okay, so in the absence of any feedback, I'm going to just end the session here. Let me check if the UN one has come up anyway. Maybe we can just take a look at. Financial. This is looking like both of auditors report. That's not what I'm looking for. Looking for the actual financial statement. Okay, so I think we'll just end the session here then. Thank you, everybody, and see you again next week for 4 p.m.
Thank you, Mr. Mike.
Yeah, thank you.
Thank you.
Thank you very much.
Thank you. Yeah,
4 p.m.
Thank you very much for the time.
My pleasure, sir. Thanks for the contribution. For 4 p.m., we have a guest session on Excel as usual, and it is on for Excel session at 4 p.m.
Okay.
So if you're interested, you can also join us and hear about index and match, XLOOKUP, VLOOKUP, and filter. So